another business day. Good morning, everyone. Welcome to 55 minutes of current and relevant business conversations right here on Business Morning. I'm Ini John Mekwa. And as usual, we start our conversation from what's going on in the oil space, global oil space, that is. We see that prices fell in early trade after Israel and Hamas agreed to the first phase of a plan to end the war in Gaza, weighing on oil's war risk premium and pushing investors to sell. So looking at the numbers this morning, beautiful green is what we have, more than 1% for Brent, 1.21% to be precise. We still see the price at around $66, went from about 55 this time yesterday, $66.25 a barrel. WTI is also up more than 1%, $62.54 a barrel. U.S. President Donald Trump has said that Israel and Hamas had reached a long-sought deal for a Gaza ceasefire. Hostage release on the plan for ending the 2-year-old war in the Palestinian enclave. Israeli Prime Minister Benjamin Netanyahu has said he would convene the government on Thursday to approve the ceasefire agreement. The war in Gaza has supported oil prices as investors have weighed the potential risk to global oil supply if the war were to develop into a wider regional conflict. Prices had gained around 1% on Wednesday to reach a one-week high after investors viewed stalled progress on a Ukraine peace deal as sustaining sanctions against Russia. And in the oil space, but back here in Nigeria, the African Continental Free Trade Area was the focus at COREN, a crude oil refiner owners association of Nigeria. They've had their 2025 summit, and they're looking for ways to maximize the potential which AFTA presents to the continent. The African Continental Free Trade Area, AFCFTA, is the focus at the 2025 Crude Oil Refinery Owners Association of Nigeria Summit. And as expected, the focus is on oil and gas. With the theme, Refining, Key to Energy Security in Africa, industry experts and government officials as well as regulators are set to measure successes and roll out possible ways for future progress.
So if the upstream is doing so well, so what should happen to the midstream? Are we putting all of this effort in the upstream industry, our indigenous players, just for us to export? Is that exactly what we're doing? Because we need to begin to question some of these things. If we are producing, the question is about producing of crude. What's the excess? What is our intention? What do we want to do with it? Each imported liter means scarce foreign exchange leaving our shores. Each imported liter represents jobs that could have been created for our youth, technologies we could have mastered, and industry capacity we could have built.
Representing the Minister of Petroleum Resources, Oil, the technical assistant downstream, Mr. Nda Adaba, outlines government plans to solidify successes in the sector.
The government has streamlined the licensing regime from license to establish to construct and operate, ensuring that genuine investors are supported, not hindered by bureaucracy. Beyond licensing, government has continued to consolidate on facilitating the access to crude oil supply through the effective implementation of the domestic crude oil supply obligation. This is because no nation can claim energy independence if it cannot refine its own crude.
COREN is asking for more government commitment to ensure that investors maximize the benefits of refining, which includes jobs, technology, and industrial value development.
We'll have a conversation for a few minutes and then move over immediately to the panel.
We're staying in Nigeria, where the economy continues its upward momentum in September 2025 as the Purchasing Managers Index, that's the PMI, rose to 54 points, indicating strong expansion in business activity across key sectors. According to the latest PMI report released by the Central Bank of Nigeria, this marks the 10th consecutive month of expansion from 51.7 composite PMI reading recorded in August. Highlights of the CBN PMI report shows that the composite PMI growth in September, alongside its three major sectoral indices, which include agriculture, services, and industry, indicates a healthy improvement in overall economic activity within the period. The improvement reflects broad-based growth across the industry, services, and agricultural sectors, reflecting sustained economic resilience in the third quarter of 2025. At the same time, the report shows strong readings across key indicators, as all key indicators such as the output index, the new orders, employment index, and raw materials inventory recorded expansion and growth. This sustained expansion is a positive sign for investors and policymakers, pointing to growing business confidence, improved supply chain efficiency, and a stable macroeconomic environment as the country heads into the final quarter of 2025. Still on the country, Nigeria has been added to the FTSE Russell watch list for a possible upgrade from unclassified to frontier market status. The move follows improvement in foreign exchange operations and easier access for international investors to repatriate funds. Nigeria was downgraded in September 2023 because of severe FX delays and capital repatriation challenges. But FTSE Russell says these issues have now been largely resolved, with the market participants reporting smoother FX transactions. With Nigeria now meeting the key FTSE quality of markets criteria, the index provider says it will decide on a potential reclassification at its next review, which is slated for March 2026. A moment of excitement and innovation in Lagos as Xiaomi unveiled its latest flagship device, the Xiaomi 15T, alongside Redmi 15 smartphone at a media launch that was attended by journalists, tech influencers, sales partners, and distributors. The event showcased Xiaomi's commitment to combining cutting-edge performance with sleek design, making premium smartphone experiences more accessible to users.
To take on our first presentation, please.
This media event comes on the heels of Xiaomi's 15th anniversary, an occasion that reinforces the brand's position as a leading innovator in the smartphone industry. To mark the milestone, the company unveils two new devices, the Xiaomi 15T and Redmi 15.
Xiaomi 15T!
At the heart of the launch is the Xiaomi 15T, a flagship device designed for users who demand excellence in design, performance, and photography. The Redmi 15 stands out for its impressive value, offering a long-standing battery, reverse charging capability, vibrant display, and enhanced storage, bridging premium smartphone experiences within reach.
Each one they stand for different standards. So the Xiaomi 15T, it actually comes with Leica camera lenses, so give you the extraordinary experience when you are doing the shooting, if you are a photo lover, picture lover. And the Redmi 15 comes with a 7,000 mAh battery, so it's very, very durable. I think it's the number one and the only one in the Nigerian market. We maybe have a slow chance or no chance to charge our phones, so these phones exactly designed for the Nigerian market and to the African market.
Using the Redmi 15 has been awesome.
Tech content creator Olatunde Shobajo shares glowing reviews describing how the advanced features of Redmi 15 perfectly aligns with the needs of Nigerian consumers.
Battery life is like the main selling point of the device. It comes with a 7,000 mAh battery, and it's a phone that you just need to charge it once and it's not going to get weak till the evening. So another thing I like about the phone is you can use it to charge other devices. So if you have another phone, you can use the phone as a power bank to charge your camera, your audio device, and even a smartphone.
Xiaomi's distributor partners, Finet and Raya Nigeria, also highlight their commitment to ensuring wide availability strong retail presence, and reliable after-sales support for Xiaomi's customers nationwide.
Together with the promotions that we are doing, this together with the after-sales services that we are doing, we can expand the awareness and trust of the Nigerian customer to Xiaomi.
Xiaomi, as a global brand that is focused on innovation, the duty is to innovate globally, and my job is to make sure that these innovations are accessible to Nigerians everywhere.
With both devices, Xiaomi says it will continue to push the boundaries of technology, reaffirming its position as a leader in innovation within Nigeria's fast-growing mobile market.
Apologies for that technical hitch right there. Now, just before we get to our first conversation for the day, let's see how the market closed yesterday. It's closed again in the green, sustaining the 145,000 level, 145,719.09. It was up 0.5% for yesterday. Looking at the activity chart, we saw more of a green right there. Top gainers, we had Lotus Shali, FTN Cocoa, and Livestock. Those stocks that you would not, normally just look to. Top losers, IMG, Livingstone, and Sunu Assurance. So top trades, we had the financial sector dominating, the insurance, and then First Holdco and Jaiz Bank making the top trades for yesterday. And we'll see how the market will react today and see how investors will behave at intraday. That'll be at 1:30. Ladi will be here to give you fresh numbers at that time. But now let's follow up on conversations, of course, that started yesterday. And I think one of the biggest conversations of yesterday was that poverty number in Nigeria, which of course the federal government has disagreed with, but the World Bank places it at over 140 million people in the poverty line. I'll be discussing this with Dumebi Oluwole. She's manager, financial derivatives company. Hi, Dumebi. Good morning.
Good morning, Ini. Great to be here.
Good to be here. So, it does seem somehow like a contrast where we see macroeconomic numbers looking good. We saw PMI from about 51.7 in August to 54 in September. That shows that, production is good, orders are increasing, and yet we continuously see not so good numbers from the micro sector, and now the World Bank seems to be confirming that with the number of poverty, which has gone up, even though the federal government disagrees. But it's the World Bank we are talking about right here. So there's a lot of credibility that comes with the number that the World Bank. So what do you see in this? Is it still that gap that we talk about of it streaming from the macro to the micro? Is that why? Or do we need some more social welfare drives, to bring the benefits down to people?
So I'll start off by saying that it is very true, in terms of the transmission mechanism, pretty much. It's always very true that you see economic growth numbers looking very positive, and the actual economic development benefits, people are not feeling it just as yet, and that's because of the time lag. When you see that, output is increasing from, say, the agricultural sector, the key microeconomic indicator you would use to gauge that is, number one, what are food prices saying? Number two, can people actually afford at the level at which prices are? And number three, the farmers producing this food items, how exactly is their living standards? And when you break it down to look at those kinds of indicators, those kinds of socioeconomic indicators, you will see that, number one, let's even use agriculture as an example, right? Farmers' incomes have not yet significantly increased. And that's because right now we still see a lot of issues around insecurity. We still see issues around access to input materials at relatively cheaper prices. And you also see issues around market prices where they planted the seed at higher cost and they're selling at a lower cost. So what does that mean for their income? What does that mean for their standard of living, right? So when you look at those nuanced microeconomic numbers, you still see that it is taking a very long time, or not very long, but it is taking some time for the positive economic numbers that we are seeing to translate to better living standards and welfare. Beyond that, you also see that we haven't seen significant improvements in the health and education sector. And those are key microeconomic numbers also, that tell us how the socioeconomic landscape looks like. A very good example, you see primary healthcare centers, for instance, right? Those are supposed to be the micro level of access to healthcare for the people within the grassroots. How well are these healthcare centers equipped? How easy is it for people to make use of these centers? Are they up to standard? Do they provide the best healthcare? Because those are also measures of living standards beyond the income that these people are making. Number 3, you look at the living wage, right? Convert it to US dollars and then break it down on a monthly basis, on a daily basis to see actual wage of these individuals. And you see that they are still earning below $3 per day. And so what that tells us is that while on a broader level, the economic recovery, is beginning to happen, the macros are improving, it is taking some time, for it to translate to better living standards. And to be very honest, it will still take some time. Why? Because of the structure of the economy that we are currently experiencing in Nigeria. And that's very typical in frontier markets where you see positive, macro numbers, and it takes a longer time, with actually between 6 to 24 months for you to see that upbeat momentum in GDP per capita, in better living standards.
But I wonder how Ghana did it, Dumebi.
Yeah.
This year we saw Ghana's inflation at 23 points in January. As we speak, Ghana's inflation is at 9%. Now, it goes beyond that. When you have, at least the conversation I've had with Ghanaians living in Ghana, and they say they actually feel the impact of that reduction in inflation. How did they do it? What can we learn from them?
So we have to start from the fact that the changes you're seeing today in Ghana didn't start this year. They started since the beginning of 2024. As a matter of fact, the end of 2023. Where they started making changes towards fiscal consolidation.
Our reform started when? 2023?
Well, not exactly. Not exactly. The announcement of the reform started in it was announced in 2023. The major moves that we did see, especially from the monetary policy sector, from the central bank, started really kicking in at the mid of 2024. And then the fiscal reforms in itself, we started seeing the major impact of that in 2025.
Okay.
So when you look at the timelines to see, how quickly are these changes, impacting the lives of people? And I'll put a very good example. Let's look at the power sector. We saw an increase in electricity tariffs from 2023 entering 2024. How stable has a power supply been, even with the Band A system? So what that tells us is, while we're seeing changes, it will take some time for things to fully stabilize and for us to see that significant uptake in living standards. But one thing I do want to mention is we are on the right path. It is taking some time for the average Nigerian to really feel the impact of these reforms and the changes that we should expect to see in terms of an increase in your actual living wage and how that translates to a better life for you. And like I said, it goes beyond the actual income that you earn. It is in the spending power, it's in the access to basic essentials like healthcare, proper education, which are still very much lacking, in the Nigerian society today. So not until we see like a significant uptick in those socio-economic, development indicators, we will still continue to have these conversations. So whether or not the numbers from the World Bank are being contested, the truth is the average Nigerian still doesn't feel better off as of today. And not until these changes are made significantly to their income levels, like what they earn and how much they can buy in the market, and 2, the actual living standards that they experience. Am I able to pay my rent from the income that I'm earning? Am I able to go to supermarkets to buy what I really want to buy? Or do I have to do save as you, buy now, pay later? Or
Buy
save
now,
as,
pay later.
before I can acquire a fridge? Before I can acquire a
but
fridge,
maybe what do you say to the perspective that if we had less leakages in government, states, local, federal, these benefits we're looking for in the life of the people, the distance would have been shortened?
Yeah, of course, very much so. It's one of the conversations I think I have very often in terms of the trust deficit between the people and the government. And I will say this very strongly. It's very uncanny to say that people are living a certain level of life, and the people that are in the position of authority to actually serve and protect these people are living way better than the people that they're there to serve. That dissonance will always be there. If the people that are the grassroots do not feel like you understand or you can relate to the problems that they feel on a daily basis, you're driving an SUV and every month it is almost changed, or every year it's changed. The average Nigerian cannot afford a car.
Cannot afford public transport.
Cannot afford steady. Let's use Uber rides, right? With how expensive they have gotten, right? The average Nigerian can't afford that. So you coming to them with an SUV, they can never believe you understand the struggles that they face on a daily basis. And not until public policy officials begin to acclimatize with the problems that the average Nigerian face, that trust deficit will always be there. And the leakages in government, and I have said this before, it starts with a mindset shift. Economic development goes beyond the policy changes that we're making that will support investor appetite or even business confidence. It goes beyond all of that. There has to be a mindset shift that trickles down from the top of the chambers to the bottom. And what that looks like in practice is you have the federal government, then you have the state governments, you have the ministries and agencies, you have the Senate, you also have the local government. So if at the local government level, there is a miscommunication and there's not a significant change in the mindset of how people should be served at that level, then that trust deficit will always be there. The monies that people are supposed to experience, the kind of infrastructure they're supposed to get, and I mentioned primary healthcare centers, that's not the job of the federal government. So if at that level, from the state government to the Senate to the local government, things cannot be corrected at that level, then how much more can the federal government do to ensure these changes happen? So there has to be a complete mindset shift. And that starts by the public policy officials understanding the reason why they are there in the first place. And the people actually also holding them accountable.
Perhaps the National Orientation Agency should start work with with the government first. Well, thank you so much, Dumebioluwale. We didn't get to talk about commodities, but just give us an idea what's going on with commodities prices.
We're seeing prices decline, which is good, ahead of the festive season. So now is the time we're seeing a lot more demand, spring up from people. People are beginning to stock up, and we expect that trend to continue. Ahead of the festive season, prices might rise. So for significant commodities like tomatoes, peppers, cooking oil, rice. Those are commodities that people typically demand for, and so we likely see an increase in demand heading towards those periods.
All right, thank you so much, Dumebioluwale, manager at Financial Derivatives Company.
Thank you for having me.
Let's take a break. When we come back, we're staying with commodities, especially when you talk about agro-industrial, and this company has been making some strides at this time. We'll talk about that with the Chief Executive Officer of that company. I'll keep it a secret until we come back from the break. Please stay with us. Welcome back. We're still talking about commodities, especially from the agricultural space. And let's see a little bit of what Nigeria has been doing when it comes to agriculture. And then, of course, we'll see what the agro-industry is feeding off from that. Some of the potential that Nigeria has in the agricultural space is that Nigeria is the world's largest producer of cassava, accounting for about 20% of global production. Yes, world's largest. And the livestock population in Nigeria includes 76 million goats, 43.4 million sheep, cattle 18.4, poultry 180 million. Nigeria is the largest fish consumer in Africa with an annual consumption of about 3.2 million metric tons. As of 2023, agricultural imports were valued at $6.6 billion. The scarce FX that we're looking for, that's where it goes to, while exports were at 2.3 billion. Local rice production only meets about 57% of domestic demand, in spite of the efforts of the government closing the borders and all of that. Estimated 33.1 million people projected to face high levels of acute food insecurity this year, unfortunately, in spite of all of this wealth. And less than 5% of bank credit is granted to the agricultural sector due to its perceived high risk. We're still waiting for the recapitalization, or what's the word now, for the Bank of Agriculture, which we're supposed to see. That's supposed to help us empower more people. However, in spite of all these challenges or not, so we've seen Ella Lakes PLC make some very big strides, especially in recent times. Atolaram is the latest one that they did, and they've been in the news. We have the Managing Director and Chief Executive Officer of Ella Lakes right here, Mr. Chuka Modi. Mr. Modi, good morning and welcome to the program.
Thank you very much.
I guess I should start by saying congratulations. That's a big and bold move that you have done. And of course, expectations are high about what this will do to the agricultural space, especially adding value since it's the agro-industrial. So tell us how your experience has been like, especially in this administration. I don't know if you had the projection of how many millions of Nigerians could lose food or not have food this year, and yet we have so much potentials, which I believe has been an attraction for you playing in the agricultural sector. So what has your experience been like, and especially since you're able to make this kind of big move?
I mean, look, everyone has potential, right? It's about how you exploit the potential and the circumstances which you're in. I think with the case of Nigeria, there are externalities and the general macro environment that dictates what can be done. It's difficult for smallholders to borrow simply because they don't have the nature of collateral banks require. Banks find it difficult to lend also because there's the risk matrix they employ, which makes it difficult to lend into the sector. With inflation at 23%, it's difficult or impossible to lend to anyone at less than 23% because that's the cost of money effectively. And unless you have government intervention in a variety of ways, the anchor borrower scheme, the central bank borrowing programs, it's very difficult for your bank to intervene in a sector. So I think there are a variety of challenges in the space that one has to navigate in trying to grow in the agri sector. But in spite of that, I mean, we're trying to do our best to expand because it's a lucrative space. People have to eat. The population is growing. So I think that there are a lot of opportunities. It's a function of how one exploits these particular opportunities.
So, I mean, you are able to forge ahead in spite of these difficulties, and we see, as you said, anybody can have potentials. Perhaps there are areas you see that people are missing out when it comes to exploring some of these potentials which the country has.
I mean, the agricultural space, the agribusiness space is a large, varied space. It's very significant in terms of our GDP and our economy. We're focusing, our focus is fairly narrow. We focus on oil palm, cassava, and we're doing livestock, cattle, and pork. Those are only 4 different income streams we have, but I think it's important to focus on specific things and not try to diversify.
What do you mean by specific things?
So we're primarily an oil palm company, and we're also doing cassava. And on the livestock side, which is why we've diversified our income stream from a risk management perspective, we're doing cattle and pork. We could go into poultry, but we're not going to go into poultry because we're trying to have a narrow focus on the things we're doing. So I think it's develop expertise in certain spaces and work hard on deploying your expertise to optimize what you're doing. And I think there are very many sectors in the agribusiness space where different people could focus on. And I think the key is to try not to be all things to all men and just focus on areas of expertise, which is what we are doing.
But do you have fears, concerns? Some people say the issue of policy inconsistency, is a threat to expansion and embracing opportunities?
This is true. It's been a function of the Nigerian political environment for a very long time. With every new government, there's a new master plan in agriculture, there's a new master plan in gas, there's a new master plan in livestock. So yes, that's a very significant problem that the private sector faces in terms of what the government is doing from a policy perspective. But I think that it's important to understand that government only has a part to play in terms of regulating the private sector and creating the environment for the private sector to thrive. So if we could get to single-digit inflation rates, then people would raise equity, people would borrow money from banks, people would have a variety of ways to actually finance their businesses. So I think the government has to take care of the macro environment and the macro picture, inflation, and that affects how financial services, insurance, and other services engage with the private sector. So it's fairly complex, and I don't think it's as simple as just what is government policy and what are they doing.
What about the issue of insecurity? That has been pointed to as a major threat to the agricultural growth, agricultural sector growth.
Yes, this is true, but I don't think insecurity is a threat to just agriculture. Insecurity has been a threat from a social perspective to everything in the economy, and I think that's one thing that is primarily the business of government to solve, because I don't think the private sector can combat insecurity, and there are a variety of reasons for insecurity, and I mean that's a 2-hour conversation on social philosophy. But yes, I mean it has been a threat for us. It's been a risk for us. We've had to spend significant sums of money on just security on our farms, in engaging private security, in mobilizing all the police. So I think if we could cut those costs, if security improved in a general sense, that would be very helpful.
Can we place a number to the loss, even if it's to your company?
I think one could model it. It's not something that it immediately comes to mind, but it's certainly a significant number, and I think it would help greatly if we could remove that cost from our balance sheet.
And does technology help? So I don't know if you've listened to Minister Bosun Tijani of Digital Economy.
Yes.
He says he has a farm, he uses a lot of technology and all of that. Does that come into play in your case?
Yes, it does, but technology is an enabler for agribusiness. I mean, we use drones for mapping our farms, we use satellite technology to understand the soil systems and understand how we can more optimize agriculture. But you have to do the farming properly in the first place for technology to be an enabler in what you're doing.
It used to be the last number that I saw about post-harvest losses was placed at 50%. Has that changed? Are things better?
We'd have to talk to the National Bureau of Statistics to get a very accurate number, but I would imagine that it cannot be very different, because you need cold storage to be optimized across the farming sector in Nigeria. You need to fix roads, you need to fix infrastructure, and since the last numbers came out, I don't think there's been any significant improvement in the nature of infrastructure or investment in cold storage across Nigeria. So I don't have the numbers to hand, but I think the NBS would probably release those pretty soon. But I cannot imagine that it's improved in the short to medium term.
Does it seem difficult to attract investors to this storage and preservation, area or the parts of agriculture?
Well, I'm a farmer now. I used to be. There are
some discouraging factors, yeah? Because it's a business opportunity.
Yes, it is. I think access to capital is difficult. A lot of these things are capital intensive. It's difficult to borrow from a bank, and it's difficult for banks to lend if interest rates are high. And so I can understand the challenges there. The alternative to raising debt is to raise equity. And in raising equity, you need to have a compelling story for investors to come into. And then there needs to be liquidity in the markets, and it depends on what type of equity you're raising. Because we're listed on the Nigerian Stock Exchange, we have access to public equity. But of course, that requires a significant amount of regulation. And I think there are a lot of regulatory hoops one needs to jump through. And that has a high cost in itself. So I think the major problem in terms of people trying to engage in business is access to capital. And I mean, that's a question for the financial sector.
And this agro-industrial segment, there are conversations that if Nigeria was able to add more value to its agro-products, crops, even the revenue and the growth in the agricultural sector will be more pronounced. So we're not just, I know that the lawmakers have, I think it's at least 20% you're supposed to add before you export and all of that. But measuring the 20%, there's another conversation and all of that. But the issue of adding value to our crops, are we making progress on that front?
That's an interesting question. If you add value to crude oil, you'll have petrol and you'd be more profitable. But it took us 40 years to finally figure that out. So it's simple and straightforward, ostensibly, but I think there are a lot of factors that affect value addition. And finance is one of them, and we've just discussed access to finance, which is difficult. But then you need to have the human capacity. If you don't understand processing, you can't process. So transfer of technology, human capacity, knowledge, expertise, and a lot of it is about human capacity and the knowledge to actually transform things. So when people say value addition, it's a nice phrase, but it's underneath it encompasses a lot of things that I think we have to take into cognizance before we understand we think it can be made manifest in the economy.
You think we're too young or it's too soon? Because you did say, see how long it took us to refine our crude. Do we have to wait that long, to also build on this value addition?
I don't think one can say too soon or too young, but there's a requirement for a level of knowledge, a level of capacity, and a level of education in order to achieve certain things.
You don't see intentionality in going through that path of knowledge and...
Well, intentionality means investing in the educational system. Intentionality means investing in schools, having a proper curriculum, not just having policies, but having the money to invest in the educational sector so you can grow people who understand what they're doing. And that's a difficult proposition if you don't have money in the economy in the first place. So I think it goes back to government policy. When you say intentionality, how serious is the government about the policies they bring forward? And if they bring forward, do they have the capacity to fund those policies? Because you can have all the policies in the world which are beautiful. If you don't have the capacity and the financing to fund those policies, then they're pretty much useless.
I know you're involved in the conversation about establishing staple crop processing zones. How's that going?
It's going well. We're focused right now on the acquisition, which we're trying to close. It takes us to a significant place in terms of the oil palm space in Nigeria. It gives us access to about 22,000 hectares of oil palm. 11,000 hectares is already planted and fruiting. So that is our focus at the present time. But in the medium to long term, we still want to go into that and scale up the business. And it's a function of where we get to in terms of our scale. But it is still part of our long-term strategic plan.
But we hear the government, even states, talk a whole lot about trade, the free trade zones and all of that. Is that making any impact?
For us at the present time, no, but I know that there are a number of companies that are involved in that, and depending on the scale of a company, I think it can add a lot of value to what they're doing.
But I heard even getting on board, getting to those zones is really expensive. You just talked about getting on the NGX. That's how many steps you have to go through, I heard also, accessing to benefit some of those things, you have to be really big for you to be able to.
Also a function of size, scale, and financing.
All right, thank you so much for your time, Mr. Chuka, the Managing Director and Chief Executive Officer of LLX, and congratulations once again.
Thank you very much.
We'll be following your story, see what you do in the oil palm space as you grow bigger with this acquisition of Tolerant.
Thank you.
Let's take a break. When we come back, we'll head to the global space here on Business Morning. Please stay with us. That's right. It's time for Global News, and Ladi Williams is here.
Yeah, thank you so much, Amy. A lot happening right here in the global space, and we see some data now. UK's Competition and Markets Authority, they've provisionally rejected nearly 80% of the water price increases sought by 5 water companies, according to a decision issued today. The CMA's provisional redeterminations on the water price controls will allow only 21% of a total £2.7 billion in additional revenue requested by the companies, amounting to about £556 million. This decision is expected to result in an average additional increase in customer bills of about 3%, significantly lower than what the water firms had initially requested. Then in Germany, their export engine spotted again in August, falling by 0.5%, defying forecasts of a rebound and deepening concerns about the health of Europe's largest economy. The latest data from the Federal Statistics Office underscores growing pressure on Germany's trade-dependent industries as weak global demand and lingering economic headwinds that's weighing on performance there. Some company news now. SoftBank, they're making another bold bet on the future of automation, snapping up ABB's robotics division in a $5.4 billion deal has sent its shares soaring 13% in Tokyo. The acquisition, which deepens SoftBank's push into artificial intelligence and robotics, will see ABB spin off its robotics arm, a $2.3 billion business employing about 7,000 people, into a new entity before handing it over to the Japanese tech giants. The transaction is set to close between mid and late 2026, pending global regulatory approval. Then we see Johnson & Johnson, they've hit a new milestone on Wall Street. Its stock climbed to an all-time high of $189.92 with a 33.76% year-to-date gain that underscores renewed investor confidence. Despite trading near its 52-week peak, Investing Pro analysis suggests the stock remains slightly undervalued, buoyed by strong fundamentals with a market cap of $457 billion, PE ratio of 2033, and a 2.75% dividend yield backed by 54 consecutive years of increases. J&J's steady performance continues to solidify its reputation as one of the market's most reliable blue chips. And the U.S. Internal Revenue Service is feeling the pinch of Washington's budget impasse, announcing plans to furlough over 34,000 employees starting October 8th, 2025, as the government shutdown that's dragging on. The IRS confirmed the move, a statement marking one of the largest workforce suspensions since the standoff began, and raising concerns about potential delays in tax processing and enforcement. All right, let's get a check now. We see the latest Federal Reserve minutes reveal a divided committee over the pace and size of future rate cuts, signaling ongoing uncertainty in U.S. monetary policy, while most officials favored additional easing before year-end. If you can put that up for me. There's concerns about inflation that may remain above the target. That premature cuts could even reignite price pressures again. We'll put up that data, and as we carry on with the conversation there, let's talk to Isaac Marshall now, the investor with TLG Capital. Great to have you, Isaac. Good morning.
Hey, good morning. How's it going, Lottie? Long time.
Yeah, long time. It's going good here.
Yes.
But, getting into the conversation now, how do you interpret the Fed's internal division? Is it a sign of policy uncertainty or just a healthy debate, reflecting mixed economic signals?
Yeah, it's interesting because I think, look, the headline is that obviously the Fed cut rates by 25 basis points. I think from about August that was anticipated. I think the main motivation, because as you know, the Fed is balancing its dual mandate between inflation and unemployment. And the problem is in the United States, the Fed, the job numbers that the Fed saw coming out in August of this year were about 22,000. Now, for context, August of last year was 144,000 new jobs, right? So if you have 140,000 jobs last year in the same month, and now this year it's come down to 20, down from near 180,000 in April, it's pretty clear that there's a softening of the labor market. I think that there's already, you've seen consumer NPLs picking up. You've seen a lot of concerns, I think, about the economic outlook. At the same time, inflation still is running at about, 2.7 on headline and 2.9 on core. So slightly above kind of where the Fed wants to be at. And I think when you look at a forward-looking trajectory, I think the projection is to have rates come down to about 3% by 2028 is sort of the median of the dot plot. So, I think it's not just sort of uncertainty, but I think it's actually real economic data that's a bit softer than folks hoped.
Definitely, and looking at some of the votes there, Stephen Myron definitely is that dissenting vote right there in the FOMC. But how might global investors reposition their portfolios in response to the Fed's latest tone and projections?
Look, I think it's really, really hard because you have an administration who, on the policy side, has really come out and challenged the framework of QE and the role of the Fed that has been flagged as basically pumping asset prices rather than sort of driving real economic growth. And at the same time, I think that the Fed has a lot of confidence in its framework because we've really had like a 15 to 17 year period, one of the longest on record, without any kind of major economic catastrophe on the one hand. And on the other hand, you could argue that there's sort of an ongoing economic catastrophe. Increasingly, it doesn't seem like any of the new generation can afford to buy a home. Real wages seem to be more stagnant than folks would like, particularly for the kind of lower middle income part of American society. And when you weigh all that together, I think that there's a huge amount of uncertainty that investors face when they look at the climate. And I think anytime there's uncertainty, it's a signal that you're going to get more volatility. And I think that's why you see folks positioning into assets like gold, much to the benefit, I think, a lot of the African economies, whether Tanzania or Ghana. I think folks are happy about the gold price increases. And the other aspect of the uncertainty has been a weakening of the dollar, where tariffs and the general concerns about the direction of the U.S. economy, very high confidence interval on the direction of where growth could go, I think makes more traditional bets look more complicated. For a long time, people were like, okay, I'll buy the S&P 500 and just go to sleep at night. And I think there's questions about what the direction of markets are going to look like in the next couple of years. And I think that's very, very difficult to forecast. So I think I come back to the point that, how we think about it is always look at the fundamentals, right? So rather than trying to call the directions of markets, what are the businesses that are doing well, are making wise decisions, and regardless of direction of markets, will continue to earn good cash flows.
Right. I guess the uncertainty will keep driving gold, at this point. And maybe sometime certainty might come in and bring those prices back to normalcy. Thank you so much, Isaac Marshall, investor at TLG Capital. Thank you.
Of course. Take care, Lottie. Thank you. Bye.
All right. So that's it. That's what's hot on the global scene.
Yeah, thanks, Ladi. And you know what gold is doing now, and already in conversation as to when will gold hit $5,000. And I'm like, we just hit 4,000. Can we just have a chill pill first before we start talking about 5,000? But I mean, that's the conversation going on around gold now. It's the benefits or beneficial investors there, the beneficials of the recent uncertainties from the U.S. and all of that. But just before we go, we'll tell you that in the markets, Nigeria's stock market, it's green at this time. In early trade, we have crossed over to 146,000 level, and there are talks about Nigeria's stock market being the best performing this year, 2025. So if you want to feel that benefit, perhaps you want to look the way of the stock market. We've seen the oil share has hit 146,000, 0.26% in the green at this time. That's how the market is looking. Hopefully that will be the numbers that Ladi Williams will be giving you at 1:30 during Business Incorporated. I'm Ini John Bekwa, wishing you the best of the rest of your day. Bye-bye.